Welcome to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. Over the next half an hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show, the African Continental Free Trade Agreement was officially launched last week, with member states hopeful that the deal will improve businesses and living standards across the continent. I'll be speaking about this historic moment with economic analyst Sunny Aroche in Lagos and global trade and investment consultant Patricia Kenneth-Devine in London. And England's third national lockdown came into force this week. I'll be speaking with our business correspondent Simon Pusey in the studio about what this means for the country's already beleaguered businesses. Then later, we'll be looking at some of the biggest company news stories of the week. On Monday, Britain's Prime Minister Boris Johnson announced that the country would be going into a third national lockdown to try to slow a surge in COVID-19 cases that threatens to overwhelm parts of England's national health system. The new restrictions include school closures and rules requiring most people to stay at home, apart from essential shopping, exercise and other limited exceptions.
As I speak to you tonight, our hospitals are under more pressure from COVID than at any time since the start of the pandemic. In England alone, the number of COVID patients in hospitals has increased by nearly a third in the last week to almost 27,000. And that number is 40% higher than the first peak in April. It's clear that we need to do more together to bring this new variant under control while our vaccines are rolled out. In England, we must therefore go into a national lockdown which is tough enough to contain this variant. That means the government is once again instructing you to stay at home. You may only leave home for limited reasons permitted in law, such as to shop for essentials, to work if you absolutely cannot work from home, to exercise, to seek medical assistance, such as getting a COVID test, or to escape domestic abuse.
Following this announcement, there was a chorus of calls from business leaders, pleading with the government for more support. Many of them suffered crippling losses in what was meant to be the golden quarter at the end of 2020. Chancellor Rishi Sunak offered a £4.6 billion support package for businesses on Tuesday morning.
Well, in order to help support businesses through a difficult period through to the spring, today we've announced £4.6 billion of additional help. For businesses in the most affected sectors who are asked to close, they will receive up to £9,000 in a one-off cash grant. It's important to remember that comes on top of the existing monthly grants of £3,000 that those businesses receive and the extension of furlough all the way through to April. We remain committed to protecting jobs and supporting businesses.
Well, for more on this, I'm now being joined by our business correspondent, Simon Pusey. Simon, a third national lockdown for England and most parts of the United Kingdom, expected to last for months. Is this the final death blow for many already beleaguered businesses?
Well, I think unfortunately the answer would have to be yes. For a lot of businesses who were on the brink before, they were hoping, the UK economy was going to open back up. But obviously, as we've seen cases rise, it's come to this. And I think a lot of businesses within hospitality and leisure and retail are really going to struggle now, because obviously everything was online before, but now it's even more important. And for those businesses that can't operate solely online, which is many of them, it's going to be really hard, especially as the most optimistic of the people out there, Boris Johnson, said maybe mid-February will begin to open back up. Well, that's over a month away, and also he is very optimistic, so it's more likely to be more like sort of March and the spring. Rishi Sunak, the Chancellor, has come out with a series of packages aimed at the hospitality, leisure and retail sectors. So there's this one-off grant, which they won't have to pay back, that can be up to £9,000 per property for businesses, which he says is to protect jobs and support business. He says that's going to benefit over 600,000 businesses across the UK. The devolved governments will also be receiving that funding, including 375 million for Scotland, 227 million for Wales and 127 million for Northern Ireland. But businesses are saying this is good and they welcome this, obviously, but it's not enough. And it's not enough really to see them through to March, which is when the next budget's going to be. Government-backed loans, such as the Bounce Back loan and coronavirus business interruption loan, will also be extended to March. So the government are trying, they're trying to do things, but the opposition say it's not enough. Keir Starmer saying that it doesn't go far enough. Parents should be given furlough because obviously schools are shut, so a lot of parents can't go to work or can't work because they've got childcare issues. He's also saying that the £20 a week universal credit cut, which comes this April, that should be scrapped. Universal credit should be left at its current rates. Mr. Sunak saying he's doing everything they can, the government's doing everything they can, and their response always to this criticism is it's always under constant review. They may do things differently, but he's saying that this is what they're going to do until March. So the 3rd of March is when that budget comes out. They'll review it then, and then they'll see what other measures they should put in place. But I think the main message for this, for a lot of those businesses in retail, hospitality and leisure, is that it's really, really struggling. It's can they stay afloat until March? I guess every time you're looking at, is it Christmas, is it March? They're now waiting for the 3rd of March to sort of see what the next sort of unravelling of packages will be.
Thank you, Simon. Here's some other business news from across the globe. South Korea's housing market is strengthening after several years of a lackluster performance. According to the Korea Real Estate Board, residential rental prices in the country rose nearly 7% year on year, the biggest growth in the past 9 years. Prices for residential transactions jumped 8.35% year on year, hitting a 14-year record high. The rising momentum is spreading from the Seoul capital area to all parts of the country. According to official data, international tourist arrivals in Spain fell 90% year on year in November after authorities imposed new travel restrictions to curb an increase in coronavirus infections. Over the first 11 months of the year, some 19 million foreign tourists visited Spain, around 78% fewer in the same period of 2019. Tourists also spent 91% less in November than in the same month a year ago. Well, there's a similar story in Egypt also. According to the country's tourism minister, the number of tourists visiting Egypt sank to 3.5 million last year from 13.1 million in 2019. Foreign occupancy rates in Egyptian hotels dropped to just 10 to 15% of 2019 levels. It's a worrying picture as tourism accounts for up to 15% of the country's national output and is a key source of foreign currency. Now over to our next topic. The African Continental Free Trade Area officially launched on January the 1st, giving Africa a unique opportunity to reduce hardship and foster inclusion. The World Bank estimates it could lift tens of millions out of poverty within 15 years. Although the implementation has been met with hurdles, most notably the postponement of its original start date due to the pandemic, backers are hoping that this symbolic integration will put an end to Africa's chronic dependence on global supply chains. Well, for more on this, I'm now being joined by Patricia Kenneth-Devine, a principal consultant at Synergy Systems Consultants UK. Patricia Kenneth-Devine, thank you so much for joining me on Channel's Business Global. January the 1st was a pretty monumental moment for global trade, and that wasn't just because Britain entered a post-Brexit era. We, of course, had the AfTA signing ceremony. But I've got to tell you, the international media were a little bit cutting. The general consensus is that Africa is not ready. Do you think that's unfair?
First of all, I'll say that's not correct from my perspective because of all the work that I've been putting. The AfCFTA gives Africa of wide over 50 countries a unique opportunity to trade and to integrate into a global economy. So this will create the largest trading bloc in the world. So this is a big opportunity. This is a huge opportunity for Africa. And I do not agree, with the fact that Africa is not ready. And come to think about the indicators and also think about some of the things that have happened, we will understand that over 50 countries have signed this agreement, which is huge, which is big for Africa. And not only that, some of the other indicators have proven that 33 of these countries have also, looked at their, ratified their agreements. And that's quite significant for Africa. And looking at all of that indicators, even 40 countries have submitted their offers. So that tells us a different story, that this is transformational for Africa. It brings us to, giving us the opportunity to actually look at the problems in Africa and the challenges and how we can actually address them. So it's quite a big one. And I don't think Africa is not ready.
I've got to say, Patricia, lots of people share your optimism. In fact, some optimistic policymakers suggest that this new bloc will strengthen the bargaining power of Africa in international trade negotiations. Do you agree with that sentiment?
Yeah, I'm very optimistic about the agreement. First of all, it places us on a very, very good platform because this is going to be the biggest marketing blog as far as we are concerned. You have over 50 countries coming together to sign this agreement, which gives us a big market space of over 1.2 billion people. And that's quite remarkable in terms of trade investment. I've been in trade and investment for over 12 and a half years. And I must say that one of the trending biggest facts to consider is the population, and I think Africa has that already. Then come to talk about the GDP. Is projected at over $1 trillion US dollars is going to be rated, and that's quite very significant. Then also that gives us, combining all of it, also $2.5 trillion GDP, which is really significant. So I would say that, the FTA has built a platform to actually give us a really strong bargaining power in terms of international trade negotiations. And this is very attractive for foreign companies. I've done a lot of work in the UK, and this is one of the things companies are looking at the moment. So it's quite really, really huge.
Patricia, some of the criticism isn't just coming from foreign observers. Some domestic interest groups are sceptical of the Pan-African project. This is the reason why some countries have been slow to jump on board, including Nigeria. Can you understand their concerns? They're not already getting enough from their own government, besides opening it up to the rest of Africa. They just feel as if, they're not going to benefit from this at all.
Well, we can't run away from the fact that there are challenges in terms of infrastructure, there are challenges in terms of transportation, and this is quite key for these agreements and the trading to go live. But nevertheless, I will still emphasize that for 54 countries to come together to sign this agreement, it tells us that, there's huge opportunities waiting for the world to explore. I think the only country who's not signed is Eritrea. And one of the factors they've given is because they want to focus more on regional than continental, opportunities for them. And I think, we understand that there are challenges, but the opportunities are more, talking about how they can actually explore the space of trade and investment.
Just very lastly, you're here in the UK, I'm here in the UK, Patricia. Has there been any heightened interest about Africa because of this agreement with your abundant clients?
Yeah, a lot of companies are already indicating interest of how they could trade in Africa and actually how they can explore the opportunities with the trade agreements gone live. And in the back of this, we're also thinking of doing a webinar come some weeks this month. And, it gives a clear indication that companies are actually interested in exploring the opportunities behind the trade agreement. So it's quite very positive, and I think it's a good sign for us to kick off the year.
Absolutely. I think it's always good to end on a positive note, and you've certainly done that for us, whether the international community like it or not. It was a historic moment for Africa, wasn't it, January the 1st? Patricia Krendevine, thank you so much for joining me on Channels Business Global. Thank you. Coming up on Channels Business Global, I'll be discussing the potentials of AfCFTA with economic analyst Sunny Oroche, who'll be joining me from Lagos, Nigeria. See you after the break. Welcome back to Channels Business Global with me, Juliana Olayinka, from our studios here in London. In a moment, I'll be speaking with Chief Sunny Oroche, but before then, here's some company news for you. Paperchase is on the brink of collapsing into administration after sales were impacted by coronavirus restrictions, placing 1,500 jobs at risk. The stationery chain, which has 127 stores and 46 concessions, confirmed it had filed a notice to appoint administrators from PwC. Paperchase had undergone a so-called company voluntary arrangement in March 2019 before the COVID-19 crisis in a bid to ease cost burdens on the business, but it admitted on Tuesday that its recovery plan had been thwarted by restrictions last year in the run-up to Christmas, a season which usually accounts for 40% of the company's annual revenue. Jack Ma, founder of Alibaba Group and China's best-known billionaire, has disappeared from the public eye after Beijing regulators halted the company's stock market listing. A former English teacher, Mr. Ma, 56, founded what would become China's primary e-commerce platform in 1999, 5 years after Amazon was founded in the US. His plans to list Ant Group on the stock market were apparently forcibly shelved after he publicly criticised Chinese regulators in October, warning them that they were too conservative and calling for them to support innovation. He has not been seen in public since. There has been speculation that his disappearance could mean he was detained by authorities, although there is no evidence of this. The latest update to Windows 10 will represent a final goodbye to Adobe Flash Player. Although Adobe remains a source of nostalgia for internet users of a certain age, the software's farewell has been long in the making. Adobe announced that it would stop supporting Flash all the way back in 2017, and users had been turning away from the service even before then. Now, we continue with our discussion on the African Continental Free Trade Area. The agreement will cover a market consisting of 1.3 billion people across 55 countries. Joining me to discuss more on this is Chief Sunny Aroche, a seasoned economist and experienced director in finance and accounts. Mr. Aroche is also a non-executive board member at United Capital plc. Chief Sunny Aroche, thank you so much for once again joining me on Channel's Business Global, albeit a remote session. So the African Continental Free Trade Agreement was officially launched this week, also via Zoom, although I've got to say it was a little bit of a muted response on the continent. I was expecting more excitement, but it just wasn't there. What was your reaction to the launch?
Okay, thank you, Juliana. Let me start by wishing you a happy and healthy 2021. On the launch that lacked the usual excitement that is expected of such a continental union, you agree with me that the COVID-19 is on the second wave, which has been very devastating for so many countries. It was initially thought that Africa would, Africa was doing better than the first wave. But with this second wave now, it is very devastating to African countries, particularly Nigeria. I can speak for Nigeria because I get the figures almost on a daily basis. And I know of people who have lost their lives to COVID-19. So launching the AfCFTA is not about excitement and the razzmatazz that goes with it, but it's the reality and the effectiveness of such a regional trade union. You are aware that they are already in existence so many African regional trade unions, like the ECOWAS in West Africa, like the SADC, the South Africa, then the CAMSA, the Central African and the Middle East, and the Maghreb Union of the Maghreb and Arab countries. They are already in existence. So this is now like an umbrella regional African continental union.
It is a union, and I know you said, let's put aside the pomp and ceremony, which we should, but the Financial Times said Africa's not ready to implement this historic agreement. It's not just the FT. I could name a list of foreign media who are a little bit cutting about the agreement. They've said a lack of modern and efficient infrastructure, unclear information about processes, barriers for women-led businesses, and, as you pointed out, the economic destruction caused by COVID-19. Do you think that was harsh or a pretty accurate analysis?
Not 100% accurate. Let me start from the barring of women. Nigeria is not one of those African countries that hold back their women. Nigerian women are really at the forefront, and there's no barrier. Like you know, that Ngozi Okonjo-Iweala, a Nigerian woman, is going to be the Director General of WTO, which is the World Umbrella Trade and Investment Organization. So no one can accuse Nigeria. And in fact, other African countries, you know, Liberia had its female president. So, but on the other issues of lack of infrastructure and information, this is a union that just signed the agreement for all the protocols recently. So you don't expect us to hit the ground running. What I expect is for all those existing regional unions to tidy themselves, to do their homework properly, and now come to the to AFTAG better prepared to keep to the terms and conditions of the agreement. What is also very important is the sanctity of the agreement and the use of technology. When you look at access for trade, road, air, and sea, the major intra-African trade routes are usually by road, and some of the roads are not the best. I agree to the extent of not being ready in terms of certain infrastructure. But if it comes to telecom, where the world is going to post-COVID that we are in now, it's not about really moving. A greater percentage of the trade, intertrade within African countries and Africa and international community is mainly services. When you look at Nigeria, the major thing we give, apart from crude oil, is our banking system, and South Africa with the telecom technology that they've rolled out. The entire African continent is linked via technology, and technology is what we're talking about now. With time, I know that the infrastructure will be addressed.
Let me, I'm sorry to interject, Chief. We're running out of time. And so if you can quickly, swiftly answer this, if you can. Ghana and South Africa, well, the leaders, they definitely have appeared to take pretty key roles, at least in these early stages. Nigeria, we were pretty much missing on the first. You've spoken about Nigeria a lot recently. What role is our country, our leaders going to be playing in the long term in AfTA? Briefly, please.
Very briefly, it's the race is not the person who took off first, but it's longevity and sustainability of the union. Mind you that ECOWAS is funded 60% by Nigeria. What you need for these regional trade agreements to really be implemented is the funding. How many of these African countries can really fund it? Nigeria is a major player in ECOWAS, and I see Nigeria being the largest economy in Africa taking up that road. Yes, we probably didn't start as excitedly as people expect, but when we cross all the T's and dot all the I's in-house, when our trade and investment, public and private sector get together after COVID has been tackled and vaccines supplied to Africa, then we can now look at cooperation, not South Africa or Ghana leading, but the entire body of AFTAG moving together in unison. There's no use saying you have the Francophone countries singing another tune because they are being controlled by some other country outside of Africa. It is an African unity propelled body.
Absolutely. Well, Chief Sonny Eroche, such a pleasure to have you on Channels Business Global. And as it was the last time, we've run out of time. We've got to get you back into the studio next time you're in London. Thank you so much for joining us on the show. Sadly, that's all we have time for today, but do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channels Business Global. Goodbye.